Hi traders, you're welcome back to the Forex Geek channel. In this video, we are going to break down a simple MACD trading strategy for beginners that will help you identify trend direction, momentum shifts, and trade entries with confidence. Now, let me just add the moving average convergence divergence to the chart. The MACD is short for moving average convergence divergence, all right? So I'm just gonna increase the thickness of these, for easy identification. All right. Now, the MACD, or Moving Average Convergence Divergence, is one of the most widely used indicators in technical analysis. It's simple to understand, okay? It's effective and it works across all markets and time frames. By the end of this video, you'll know exactly how to use MACD for better trade entries and exits. So make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss an important strategy, okay? Let's just jump right in. Now, before we dive into the strategy, let us quickly understand what the MACD indicator is and how it works. Now, the MACD is a momentum-based indicator that helps traders identify the strength of a trend and potential reversal points. It consists of three main components. The MACD line. It consists of three main components. The MACD line, it is the fast line. You can see the fast EMA. It is calculated by subtracting the 26-period exponential moving average from the 12-period EMA. Okay, the MACD line is gotten by subtracting the 26-period EMA from the 12-period EMA. Okay, then the signal line is a slow line. Okay, it's a 9-period EMA of the MACD line, which helps confirm signals. Then you also have your histogram, a visual representation of the difference between the MACD line and the signal line. Now, the key to using MACD effectively is understanding crossovers and divergence. When the MACD line crosses above the signal line, it suggests bullish momentum, which means potential buy opportunity. On the other hand, when the MACD line crosses below the signal line, it suggests bearish momentum, which means potential sell opportunity. Now that you understand how MACD works, let's go over the best settings for beginners. Now, most charting platforms use the default 12-26-9, and they work well for most trading styles, okay? But depending on your strategy, you can tweak these settings, okay? You can use the 12-26-9, which is the default MACD settings, for your just general trading, okay? It works well for general trading. But then if you want a more sensitive strategy, you can use 5, 13, and 6. This one is more sensitive and it is good for short-term trading. Then if you are a swing trader, you can actually use 21, 55, and 9. This one is smoother. You can try it out. It's smoother and it reduces false signals for swing traders. Okay, but for this simple MACD strategy, we're just going to be using the defaults. Okay, we're going to stick with the default 12-26-9 because they provide a balanced mix of sensitivity and reliability. Now, let's just get into the step-by-step MACD trading strategy. Okay, the first step is to identify the trend. All right, identify the trend. That is the first step. Before taking any trade, always determine the overall trend direction. You can actually use your trend lines. You can also use your moving averages, okay? Because moving averages also help to identify trend, okay? Then once you have identified the trend, because MACD works best when trading with the trend, all right? So once you have identified the trend, you can look for MACD crossovers. Remember that a buy signal occurs when the MACD line crosses above the signal line and the histogram turns positive, like what we happened here. It indicates bullish momentum. But a sell signal occurs when the MACD line crosses below the signal line and the histogram turns negative, like what happened here, because it suggests bearish momentum. So after you have gotten the signal from the MACD, for example, this is a sell trend and we got a sell signal around here, the next thing for you to do is to confirm with price action. To avoid false signals, always confirm the crossover with candlestick patterns or key support and resistance levels. Okay, so ensure to plot your levels on your chart and then watch out for candlestick patterns. For example, we can see we had a bearish candlestick pattern around here. This bearish engulfing, it's confirmed the sell, and you can see if you had entered the sell around here, you would have gotten, you know, some significant profits as the price dipped all the way down to this point. Okay, if you find a bullish crossover, then of course you should be looking for buy trades. Okay, but if the bullish crossover occurs near a strong support, it's a better confirmation for a buy. And if you find a bearish crossover occurring near a strong resistance, it's a stronger sell signal. Then for your entry and risk management, you should enter the trade once the crossover has been confirmed. All right, enter in the direction of the trend. Okay, make sure you do that, please. And then for your stop loss, you can place your stop loss below the recent swing low for a buy trade or above the recent swing high for a sell trade. Then for your take profits, you can look for key levels like previous highs or previous lows. You can also use Fibonacci retracement levels, okay, or rather Fibonacci levels, or, you know, when the MACD starts to show weakening momentum by, you know, lower histogram bars like what we can see happening around here, then you can exit your trade. Then for a bonus tip, you can combine MACD with RSI indicator to increase the accuracy of your trade signal. You can actually combine MACD with the relative strength index, okay, for additional confirmation. Now, even though MACD is simple, right, many traders make mistakes that lead to unnecessary losses. Here are a few common mistakes to watch out for. The first is ignoring the overall trend. Always trade in the direction of the trend for higher probability setups. It is important. Secondly, it is bad to take every MACD crossover blindly. Okay? Because some crossovers happen in choppy markets. Imagine finding a crossover now that the price is consolidating. You can see that we have a consolidation around here. So some crossovers happen in choppy markets and they can be false signals. So take note. And then it is bad to ignore confirmation from price action. Always check your support and resistance zones. Also, check out for candlestick patterns before entering a trade. Okay? And there you have it. Now you know how to use this simple MACD trading strategy for beginners to identify momentum shifts and trade smarter. If you found this video helpful, make sure to hit that like button and subscribe for more trading insights. Also, drop a comment below. Do you use MACD in your trading? What is your experience with it? Let us discuss in the comment section. In the meantime, keep learning, keep trading, and I'll see you in the next video.